This is Capital Ideas TV, on location in Vancouver. Coming up, Women in Power, featuring the co-founder and chief executive of Lucara Diamond, the co-founder and COO of Aqueous Pharma, Quadron Cannatech CEO, and the founder and chief executive of Peekaboo Beans. Hello and welcome to Capital Ideas TV. I'm Mark Bunting. Now, do you like what you see here? This 472-carat diamond is the latest find by Lucara Diamond at its Karowe project in Botswana. It's sure to make waves when it's put up for auction later this year. What's most impressive, it's only the third largest stone recovered at Karowe. If that's any guide, Lucara has plenty more where that came from. The Karowe project has quickly gained a reputation as the home of special gemstones. Those are defined as more than 10.8 carats. Lucara has routinely pulled out more than 150 of them per quarter, dating back to 2014. Q1 of this year was the company's third highest haul so far at 218, and 4 of those were larger than 100 carats. Lucara Diamond is currently working toward a pre-feasibility study that will underpin a potential underground mine at the Karowe project. That could open up a whole new treasure trove of diamonds waiting to be discovered and drive shares of Lucara higher in anticipation. Co-founder and CEO Eira Thomas explains what investors can expect from the crown jewel of her company and what she's hoping to fetch at the exceptional stone auction later this year. Eira, you recently discovered your third biggest diamond from the Karowe mine, 472 carats. Now, the biggest ones for you and the second biggest all-time, Lesedi La Rona, you tried to sell through Sotheby's. So what was the lesson learned there, and how do you plan to sell this new diamond?
Well, you know, our idea with the Lesedi La Rona, you know, that is a diamond that is obviously very special at 1,109 carats, second largest diamond ever to be recovered in world history. So we felt that we needed to, you know, think about the sales process differently, and we engaged Sotheby's with the idea of selling it to a potential investor. So with the idea that this stone wouldn't necessarily be sold to become a polished diamond. And you know, the response we had, you know, initially I think was very, very good. But at the end of the day, we weren't able to sell the diamond through Sotheby's. So we ended up selling Lesedi La Rona in the more traditional way within the diamond community.
And then the plan for this current one, the 472-carat one, the traditional way as well?
Right. Well, the 472, and it joins kind of an illustrious group of large diamonds that have been recovered from Karowe over the last 5 years. And we continue to sell those through what we call our large stone tenders. And that's our intention for the 472 as well.
You've done a preliminary economic assessment at Karowe to see if you want to do an underground mine. And you have a resource estimate coming out in May. So what numbers have you seen so far? What numbers do you need to see to be able to say we should go ahead with this?
Yeah, listen, I think we're feeling very good about the potential to go underground. The preliminary economic assessment gave us you know, close to a $500 million net present value and a 39% internal rate of return. The capital costs to go underground are affordable. We're looking at about $200 million that we can invest from the free cash flow that we generate from the current open pit mine. So the economics are looking very strong. We've of course got to now go to the next stage and continue to de-risk the project. In 2018, we're going to spend about $30 million on additional drilling, which is going to look at the geotechnical aspects of the ore body at depth as well as the hydrogeology. Those are the sort of 2 key areas that we're focused on now. And once we've got answers to those questions, we'll be in a position to make a decision on the underground. But certainly at this stage, we're feeling very optimistic. And that will extend our mine life from 2026 to 2036.
Let's get to Clara Diamond. This is the digital sales platform that Lucara has bought. You own 35% of that. And basically you're saying rough diamonds have been sold a certain way for about 100 years, and it's inefficient and it needs to be disrupted, and that's what Clara Diamond wants to do. But tell us initially how they're sold now and how it's just not efficient right now.
Sure, and yeah, just to be clear, Clara shareholders basically have vended their Clara shares for Lucara shares. So I'm now a larger Lucara shareholder through Clara. But Clara fundamentally is poised to completely transform how we sell diamonds. The way we sell diamonds now is really in response to the challenge of selling a product like diamonds, because they are heterogeneous. Each diamond is unique. They all have distinct price points. And the challenge as producers is, how do you sell this heterogeneous commodity in volume regularly for repeatable revenues? And the way that we've sort of solved that problem is to basically not sell individual diamonds, rather we sell batches or assortments of diamonds, and we do that every sort of 4 to 5 weeks. Today, however, we do have technology which is going to allow us to sell individual diamonds. And really the question is, what is the benefit of that in the value chain? With Clara, we're proposing basically to sell diamonds individually. We'll be asking our customers or manufacturers basically to tell us what they want to buy in terms of the polished product they want to produce and the price they're willing to pay for those diamonds. And we're asking producers basically to use existing technology that's in widespread use in the diamond industry to basically scan individual diamonds as they're produced at the mines. Clara, our IP, which we've patented now all over the world, is really an algorithm which allows matching to happen between that rough diamond and its optimal polished output. And so Clara basically finds the match, and in doing so, we believe will unlock significant value. The test work that we've done to date on Clara indicates that we can unlock between 18 and 23% of incremental value throughout the diamond supply chain to the benefit of all participants. So this unlocked value is not only going to go to the producer, it's also going to go to the manufacturer and the other participants that exist in the value chain as well.
We feel like we're the wave of the future in terms of how people test for things. We anticipate being the first sample-to-answer instrument that can process up to 22 pathogens at a time. Whatever you want to test for, you can do it on your own. You don't have to ship it away to a lab. You don't have to have an expensive microbiologist. It's something you can do on site. You collect that sample, you input it into the machine, you hit a button, an hour later you get the result you're looking for.
If you think you have a good understanding of the medical potential of cannabis, take a look at this chart. It's a riot of information. This is a breakdown of some of the chemicals inherent in cannabis, and it's not even close to an exhaustive list. Not even our top scientific minds fully understand just how useful so-called cannabinoids may be in treating a whole host of ailments. Many companies are feverishly building that knowledge and hoping to capitalize on a breakthrough medicine. Aqueous Pharmaceuticals is among those racing to find the next big thing. The company is currently developing 4 therapeutic treatments in addition to the non-cannabis related ones it already has on the market. The last one on this list, AQS 1304, is a patch applied to the skin that releases a steady and consistent dose of cannabinoids. The aim is to treat various neurological disorders such as epilepsy and anxiety in a way that is easier for patients to use than traditional treatments. While Aqueous is also striking partnerships in the cannabis industry with companies such as Karowe, and it's excited about the prospects for its therapies, co-founder and COO Ann Stevens is quick to point out that these cannabis ventures are just a part of what the company is developing. So Ann, give us the overview of what Aqueous tries to accomplish with physicians and how it helps you in terms of getting feedback and knowing in which direction you want to go.
First of all, I'll say that Aqueous is in a unique position because we have a commercial arm here in Canada as well as a development arm. So we're able to be very close to our customers and end users, which are the physicians, and constantly be getting feedback from them that informs what products we should be looking at or should be developing that would actually satisfy a need for them.
And that leads us to the acquisition you made recently called Zepto. So tell us about this and why is it exciting for Aqueous?
Yeah, so this is a perfect example of Aqueous being responsive to customer needs and feedback. Zepto is a really innovative product used in ophthalmology for the first steps in a cataract surgery. But it's a great complement to our sales force in the ophthalmology field right now. And again, constantly getting feedback from physicians and hearing that this product was available in other markets and could really benefit patients here in Canada. So we sought out to find the product and to bring it in, and we just announced it this week. So we'll be launching it in the next month.
So this Zepto product, the way I understand it, has to do with the lens, or it's something different than that?
Yeah, it helps. It's a physician tool basically. So it helps with the first step of the cataract surgery. And it provides a very precise way to do that step. In particular, it's called a capsulotomy.
Now, when I talked to your CEO months ago, Doug, he intimated and hinted at that you guys were looking at, guys and gals, we're looking at getting into cannabis-based treatments, and you are doing that indeed. So give us an overview of some of these patches you're working on, some of the treatments you're looking at as far as what sort of ailments you're pursuing.
Absolutely. So that again comes from being responsive to physician needs, and it was in conversations with some of our physician base around some of our neurology products that we have in epilepsy. We have one epilepsy product in development and two that are under review by Health Canada right now. And it was our neurology physicians who were talking to us about their concerns with their patients going out and seeking product that they had no control over, the quality, the precision of dosing, or really understanding what was actually in the products that they were getting from dispensaries. So we are working with the physician group as well as with several partners now that we've established throughout Canada to launch some clinical programs that would provide those physicians with some clarity around what the right products could be to point their patients in the right direction.
And you're looking at bipolar disorders, epilepsy, anxiety, those areas?
We're mostly focused to start will be in the neurology space, so in either epilepsy or MS, multiple sclerosis.
Now, Aqueous is into all sorts of other areas, separate from cannabis, of course. One of them is an anti-nausea treatment for pregnant women, and you're dealing with the FDA there. So where do you stand there?
Yeah, so that's a really exciting program for us. That was based on early on in our life cycle as a company, we had developed a partnership with Corium International, who's a world leader in transdermal patch development. And through that partnership, we were really trying to think of what products could utilize a transdermal patch and where it made the most sense. And for us, an anti-nausea patch was very intuitive. This product would be replacing an oral medication for pregnant women that are experiencing nausea and vomiting. So, when you think about when you're in a state of being nauseous or throwing up and having to take an oral pill to treat that, you might not know how much you've actually taken or absorbed. And pregnant women in particular are very averse to taking any more medication than they really need to. So with this solution, it's an easy-to-use transdermal patch application of the same product, and they can just keep it on until they feel symptom relief and then simply remove it. So that one we've developed through, we've advanced it through 2 proof of concept clinical studies, and we'll be looking to do the full clinical program in the coming months.
And tell us about some of the products that Aqueous has on the market now and the revenue that you're generating and where the main focus is for the company this year.
Right, so the products that we have on the market right now are specialty products. They're mostly focused on ophthalmology. Last year we exited 2017 with roughly $1 million in revenue, and in 2018 we expect to triple that.
Blockchain is going to be big. It's early days right now. It's much like the internet in the 90s, and we want to be in early. And we're diversifying our investments so we can sort of pick those winners and in 10 years from now see the benefits from today's investments. We were one of the first public companies to dedicate ourselves exclusively to blockchain. We know that in 5 to 10 years from now, it is going to define consumer life, finance, real estate, healthcare, and we offer a good exposure into this early technology for our investors.
Pretty soon, the stereotypical marijuana image of a joint might be replaced with this one. Cannabis oils and extracts are quickly becoming the preferred method of consumption. They're a healthier and more discreet way to ingest cannabis, and that's important for a wide swath of users. The numbers speak for themselves. Cannabis oil sales have taken flight over the past couple of years. Data from Health Canada shows they were just a third of what dried cannabis sales were in mid-2016. But oils took the lead just a year later, and the gap continues to grow wider. Cannabis producers are no strangers to this trend. They're eager to ramp up their oils output in a big way, but churning out high-quality cannabis extracts requires special expertise and equipment. Say hello to the Boss by Quadron Cannatech. It's a military-grade cannabis extraction system. It's a highly automated plug-and-play solution that uses carbon dioxide to pull out cannabis components from feedstock. Quadron says its proprietary technology boosts the flow of CO2 within the system, leading to larger yields at a fraction of the cost. Quadron sold its first Boss system in December, and 2 more quickly followed in January. The company expects big things on the sales front this year, thanks in part to a partnership with Washington State's Lucid Labs. Quadron's CEO, Rosy Mondin, breaks down the benefits of the Boss and how she sees it shaking up the extracts market. Rosy, we're seeing a real rapid growth of interest in cannabis oils compared to dried flower. So why is that happening, and what does it mean for your business?
Well, we definitely see it happening for a variety of different reasons. First of all, there's a lot of new users coming out into the marketplace. So smoking a traditional joint really isn't something that a lot of people want to do. It's not very discreet, it's smelly, and you're burning a carcinogen into your body. So a lot of people want to avoid that. Also, just the virtue of preparing that joint to smoke. A lot of people don't know how to do it. And quite frankly, I know people who've been smoking joints for 20 years and still can't roll properly. So
I have no comment.
So that's one side of it. But I think more importantly, on the public health side, vaporizing or ingesting cannabis in different forms other than smoking is really in the public health interest. We want to get people away from smoking and consuming and receiving the medicinal benefits or their recreational benefits, the intoxicating benefits, in other cleaner ways. So vaporization is definitely one of the clean ways to do so. It's smell-less, it's very, very discreet, and it's clean. There hasn't been studies to show yet that there's been any issues with ingesting it through vaporization into your lungs. So it's a clean product to do so. And then of course the oils are the base for every other product that's made with cannabis outside of smoking it. So the oil forms the basis of your edibles, of topicals, your creams, salves, suppositories, capsules, that all has oils at its base, including the infused drinks. So it all comes out of extracts.
Right, and that plays into your strategy. You have the Boss system, which you say is smaller and more efficient and cheaper and so on than a lot of the other extraction systems out there. So what makes it so good?
Sure, so that's right. It's exactly all of those things. What we did is we looked at what was existing in the marketplace at the time. This would have been late 2014, early 2015. We actually had set up a laboratory and ordered a piece of extraction equipment, a CO2 extractor for the client that we were building the lab for. And the machine that was delivered was very large, very bulky, and relied on a lot of human capital to operate. So we looked at that, and my business partner has 23 years of working with CO2. So we just thought, you know I can make something better, and let's go off and build something better. So we did. So we built a better mousetrap, quite frankly. The machines that are out there right now usually take up almost a garage-sized space. They're large and bulky, consume a lot of energy, and take a long time to process. The cost is also inordinate, and the delivery times, there's a long wait time to get it. So what we've developed is something that's definitely cheaper. It's $250,000 for a 45-liter vessel. You can tack on another for $325 total. The footprint is about that of a coffee table. The energy efficiencies, it takes 2 plugs like you would plug in your dryer, so 2 30-volt plugs. And it just processes faster right now. So the total processing time with the actual extraction time and cleaning is about 6 hours. We're actually working on efficiencies to triple the density that goes into the 45-liter vessel. So right now you can get 20 pounds of feedstock, which would be cannabis material, into the vessel for processing. We're R&Ding a process right now that would triple that to 60 pounds per size. So now you can take one of our smaller machines, and we're starting to create an industrial scale type of processing density with the same smaller footprint. So we're pretty excited to see how that R&D comes out.
And so who are your customers, and what kind of traction are you getting with the Boss?
Well, the nice thing about us is that we're not dealing with touching the plant, so we don't touch the actual cannabis, so we don't have to be licensed in that way. That is something I do want to do, and I can talk about that separately. But we can sell our machine anywhere in the world. So right now we've sold to licensed growers. We've got LPs, so those are the ACMPR licensed producers in Canada that are looking at the machine. And we've got people, we've got UK buyers right now looking at the machine, German buyers, and we've sold a machine to the US as well. So our scope is truly international, and we can sell anywhere. Now that's just our first machine. We do have other machines in development as well.
That's a fascinating process. Now you touched on vapes, vape pens. You're in that business too. You have all sorts of ancillary products as well. So how important is that part of your business?
Very important, actually, because what we want to do is establish processing centers. So we are looking to work with partners in establishing centers where we would supply all the equipment. We'd build out the laboratory. We're also looking to have a relationship with a manufacturer so that we can actually brand their equipment under our Soma Labs brand. Soma Labs is one of our subsidiaries, and it manufactures and sells the machinery and sets up the lab environments. So what we want to do is be able to set up a whole lab structure where we can verify the processes that the oils come through. The machinery is ours, and so we'll say it's a Soma Labs certified oil at the end of it. And then that oil, again, it depends what your carrier is going to be. Right now we are focused on the vape pens, and so that just adds to our suite. And then we'll say it comes, you know, as a Soma Labs certified product. So right now it's vape pens. We are going to go into capsules next. Suppositories is a hot item topic as well, and so we're just going to be adding to all of our products. The nice thing about the vape pens as well is it's hardware. So we do have people who have been purchasing the vape pens. We've announced just recently there was, I think, a $250,000 sale, $500,000 last year, and that's just in the hardware alone. So even just on that, that's a healthy business for us as well.
We're proud of the fact that we've been profitable every year since inception. If you have a business and you have a vision for it, and you want to borrow some serious money, you have to know who your lender is. You have to trust them. What we're doing is providing the capital that enables them to realize their ambitions. Money means everything to people who don't have it. We're here, we're stable. We got 40 years now, we're looking at the next 40.
Visit any shopping mall and one thing becomes abundantly clear. There's a seismic shift underway in the apparel business. Amazon.com is squeezing out many clothing retailers. So much so that Morgan Stanley sees the e-commerce giant owning 20% of the US market by 2020. But there's one thing more powerful than the lure of the World Wide Web, and that's the human connection. And that's not just sentimentality speaking, there are hard numbers to back it up. A study spearheaded by Ogilvy, Google, and TNS ranked the factors most important in building a brand connection. Topping the list was word of mouth. 3/4 of consumers surveyed named it as a crucial factor. Store visits and YouTube demonstration videos rounded out the top 3. There are 2 key takeaways from that survey. One is that consumers trust their inner circle when making decisions. And 2, they want as tactile an experience as possible with a product before buying it. Peekaboo Beans has tapped into a business model that checks off both those boxes. The company sells high-end children's apparel through a rapidly growing group of salespeople it calls stylists. These stylists host get-togethers and pitch the products to family and friends, earning a commission on their sales. This direct selling model has helped Peekaboo Beans build a ton of brand credibility with essentially no overhead cost to drag on its bottom line. Peekaboo Beans recently expanded into the US. The early returns have been promising. Peekaboo stylists are now present in 34 states, recruitment jumped to a record, and sales are climbing at a triple-digit pace. Founder and CEO Tracy Costa gives us an update on how her expansion plan is unfolding and where she sees Peekaboo by year's end. Tracy, you believe that at Peekaboo Beans you're helping to revolutionize retail, revolutionize e-commerce retail. So how do you think you're doing that?
Mark, we're really reinventing the way that women shop and dress for their kids. We're basically what I would call a hybrid of bricks and mortar and e-commerce. And we're allowing any mom and a few good dads to sell our product as a business and earn commission for selling and building sales teams. Essentially, we're creating distribution through people.
The last time we talked, Tracy, you had just moved into the United States, at least Peekaboo Beans had, and It seems like based on the numbers, you're getting some good traction and some good growth. So update us there.
So since we last talked, we have entered into the US, as you mentioned. We're now represented in 34 states as well. We have continued to grow into Canada. And our second quarter recruitment was up 433% of our previous quarter. And we brought on over 288 new reps during that period, which outpaced our 2017 year of total recruitment. So we're seeing good feedback on our entry into the US as a soft launch, and we're really excited about continuing our marketing initiatives to help seed the market further and expand and grow. We're seeing good traction again in the third quarter, and our results were showing there as well.
I see you've launched some new products, Grab and Grow, affordable undergarments, and then Petite Boutique in a Box, which is a clothing set in a box. So what are these exactly, and what was the thinking behind them?
Well, essentially, we're looking at enhancing our rolling retail boutique experience for our stylists so that they can be successful in earning more commissions, and we can have more of an offering for our customers. Really, our product is about looking at the needs of children. And so we introduced, early this year, we introduced Underbeans, which is a sensory-friendly underwear with seamless, comfortable, cozy underwear line. And we saw an increase of our average order from $125 to $141, which again, if you look at industry standards, the average order in direct sales is $70. So we're outpacing it by double. And these grab and go products just enhance that experience. Well, we sold over 3,000 pairs of underwear in a month and a half. So what we now know is that that offering is very successful for us. And the Petite Boutique in a Box was a low-cost entry point for someone to join the business with little risk at $49, be able to have an online website and web presence and social media presence, become a stylist, and be able to access discounts and all of the preferred programs as a stylist. Petite Boutique in a Box showed us an extreme amount of growth in our second quarter of stylist recruitment. So we're seeing it as a really successful initiative.
What's Peekaboo Beans doing as far as growth initiatives, and what are you doing as far as cost control?
So 2018 is all about stylist growth. So we're working with a brand and marketing firm to reorient our brand and marketing messages, testing new campaigns through a digital marketing strategy, and strengthening every aspect of the sales and product cycle, because that's our focus, is just bringing on more stylists and putting more eyes on Peekaboo Beans. And as far as cost control goes, we recently moved our manufacturing partner to Vietnam, and we're seeing a decrease in our cost of goods without sacrificing the quality or, of course, the brand. And we're very happy with these initial results.
And lastly, Tracy, looking at the stock, it's in a range of, say, 50 cents to 90 cents. I know you met with some investors recently in the United States in Phoenix. So what are you continuing to do to get the message out to investors?
So we recently closed in February at $2.2 million oversubscribed financing at 75 cents. At that time, we brought in a couple more significant shareholders, one being a fund. And so we have a very good, strong shareholder base. And at that time, the price point of the stock went up to around 99 cents, so really good interest. And now for us, we're really about driving that growth, and we have some really good metrics and data points coming out and growth points coming out. So alongside of our growth, we'll be doing some really key marketing initiatives. Right now, the market is what I would say kind of a soft market. So we've seen, with little volume, we've seen that the stock can move down. I'm not worried about that because I know that we have some really strong initiatives coming out and some good marketing to support that.
From the heart of the financial district in downtown Toronto, that's our show for this week. I'm Mark Bunting. Be sure to subscribe to our YouTube channel so you don't miss an episode. And for more great investment research and great investment ideas through our weekly digest and morning note, subscribe to capitalideasresearch.com. Thanks a lot for watching, and thanks for investing like a pro. We'll see you next time.